Something big is brewing again in Washington, and this one could directly affect your bank account, but not in the way you might expect. We're hearing whispers and early confirmations from inside Capitol Hill, discussions that could shape the next several months and possibly bring a surprising shift in financial policy. It's one of those things that starts as a casual remark, then turns into a working draft, then quietly shows up in a committee room, and before you know it, could be a line item buried in a bill that has real consequences for people like you and me. But the question is, will this one actually reach us? And what will it look like when it does? For folks relying on Social Security, SSDI, SSI, or just trying to stretch a paycheck through rising prices, this might be the kind of break you've been waiting for, if the right people in Congress let it happen. The idea behind it has been floated before, but this time it seems like the conversation is picking up speed, maybe because of the economic pressure building, or maybe because it just fits the right political moment. Whatever the reason, the concept that's being considered now could provide a form of relief, unlike what we've seen in the past. And if you've bought just about anything lately, whether it's groceries, clothes, or something as big as a car, you might unknowingly already be part of what makes this plan possible. Now, I know some people are thinking, here we go again, more promises, more headlines, more talk with nothing to show for it. And to be fair, that's happened before. We've seen proposals pop up only to disappear quietly behind closed doors. But something feels different about this one. The numbers behind it are real. The financial mechanics are already in place. The only missing piece is political agreement. And that's where things usually get tricky. Still, based on recent briefings and press remarks, there's a path forward, even if it's a narrow one. Stick with me through the end of this video because not only will I explain exactly how this would work and who would benefit the most, but I'll also reveal one little known factor that could prevent millions of low income Americans from receiving anything at all, unless they take one specific action before the end of next tax season. This is one of those situations where being informed early could make the difference between getting a nice surprise and missing out completely. Before we get into the full breakdown, if you appreciate these updates and want to stay ahead of what's really going on, not just what's trending for the day, go ahead and tap the like button. It helps this information reach more people who could really use it right now. All right, let's dig in. Now, the backdrop to this whole situation is the enormous amount of money flowing into the federal government from a source most people don't even think about. It's not coming from income taxes or payroll taxes. It's coming from something baked into almost every purchase you make: tariffs. These are the extra charges the government places on imported goods, and while companies technically pay them up front, those costs get passed down to consumers. That's right. Every time you've paid a little more for a car, appliance, electronics, or even certain types of food, you've been indirectly funding one of the government's fastest growing revenue sources. And it's not a small amount either. In just the past several months, the federal government has pulled in over $100 billion dollars from these tariffs. That number is expected to rise substantially over the next year, possibly hitting 300 to 500 billion depending on trade activity and future rate changes. It's a windfall, but here's the twist. That money wasn't specifically earmarked when the tariffs were created. It just goes into the general fund. And now people are starting to ask, what if we gave some of that money back? This is where the core idea comes in. And it's not just speculation anymore. Just this week, in a public setting, the former president made a direct statement suggesting the government is actively considering giving a portion of that tariff revenue back to the American people. Not in the form of broad stimulus, not under the emergency pandemic style programs, but as a targeted rebate linked to consumer spending. Think of it like this: if you've been paying higher prices because of tariffs, the idea is that you deserve something back, like a refund or credit for the extra burden. But as always, the devil is in the details. The first hurdle is defining who qualifies. Would everyone get it, or only certain income groups? Some insiders say the plan being discussed would limit eligibility to households below a certain income threshold, possibly tied to adjusted gross income from recent tax returns. Others argue that it should depend on what types of purchases you've made. One proposal would give larger rebates to people who made big ticket purchases that were heavily impacted by tariffs, like vehicles or major appliances. For example, imagine you bought a new car this year. You likely paid a few thousand more than you would have just a couple years ago, thanks in part to those hidden tariff costs. Under the most generous scenario being floated, that could make you eligible for a rebate of up to $1,500 or even $3,000, depending on household size. But if you didn't buy anything other than basic groceries, you might not qualify for nearly as much, or anything at all. And here's where things get even more complicated. Some in Congress, especially fiscal conservatives, don't want to give any of the money back. They want to use the tariff revenue to pay down the national debt, which now sits at over 30 trillion. They argue that since the country is already in a financial hole, sending out rebate checks would be irresponsible, even if the money technically came from consumers in the first place. Others believe the rebate should be targeted only to working Americans who pay into the tax system. That means it could be structured as a tax credit rather than a direct payment. If that happens, millions of seniors, disabled individuals, and non filers could be left out unless specific language is added to include them. And that's where timing becomes political. If this proposal moves forward, it's unlikely to be finalized in 2025. Lawmakers on both sides are watching the calendar, and some Democrats reportedly don't want a financial benefit going out right before the 2026 midterm elections, fearing it could shift public opinion. Republicans, meanwhile, see this as a potential win, especially for low and middle income Americans feeling the pinch of inflation. That brings us to another key point: inflation itself. The Federal Reserve has made it clear they don't want any new policy that could accelerate inflation. Sending out hundreds of billions of dollars in rebates might risk pushing prices even higher, especially if it lands in the middle of a tight labor market. So, even if the political stars align, the economic side might throw a wrench in the works. Still, there are other ways to structure the rebate that wouldn't cause the same inflationary concerns. One option is limiting the rebate to a tax credit that only applies when you file. That way, it doesn't flood the economy all at once, and it ensures only taxpayers receive the benefit. Another option is offering itemized credits for specific purchases, say, energy efficient appliances, electric vehicles, or other American made products that support domestic jobs. Whatever version ends up moving forward, it's important to understand that this isn't just political theater. The conversation is real, the numbers are real. The only question is whether the final package includes the broader public or just select groups. That's why staying informed is so important right now. Because if this does move forward, there may be actions you need to take, like making a qualifying purchase, filing a return next tax season, or updating your status with the IRS to make sure you don't miss out. So, what's the bottom line? A rebate funded by tariff revenue is on the table. It's not guaranteed, and it probably won't happen this year. But the fact that it's being discussed